Hey guys, hello and welcome. I'm Jay. This is smarthelping.com. We've got another iteration of the renewable energy sector. This financial model is for biomethane, or it's a natural gas. We're going to be talking about building out feedstock facilities, processing facilities, and how much it costs to do so and how much revenue you can make over time. The other renewable energy model I've done so far is wind farm, and I'm really excited to do, maybe a couple more in this space before I move on to something else. So far, it's been great. So here we go into the model. I'll go through each tab, explain how it works. This is a full financial model with a three-statement integrated model, discounted cash flow analysis, you've got income statement, balance sheet, cash flow statement, and all kinds of stuff. So let's jump into it. So first off, you got the global control tab, name of the company. They'll just go at the top of the financial statements. Forecast period. This is going to allow you to dynamically change the length the forecast goes for. You could do 60 months, 70, 2 months, 84, whatever amount you want. It doesn't have to be even multiple of 12 either. Just will define when things stop up to 10 years forecast period. When you do stop it, you can choose to include a terminal value or not. This doesn't mean you're necessarily planning to sell. This is just saying, do you want to uh, estimate essentially the future value of the business at some endpoint, knowing that you could operate it for another 15 or 20 years. So if you do hit yes here, it's going to give you a multiple of the trailing 12-month EBITDA as the value of that. Everything else here on the global control is fairly visual. You're just looking at data from other tabs, so cash sources, equity from investors, owners, um, and then you've got income tax rate, long-term capital gains rate, if you want to show taxes, and then we've got our sanity checks down here to make sure all of the statements match. Moving on to site deployment, so this is where you'll spend a bit of time. Well, site deployment and revenue, these two tabs are going to have a lot of stuff. So here, by site, we're just trying to say a tranche of basically a separate facility that you're constructing or building out, or you could be acquiring. This doesn't have to be new construction. So you've got land acquisition here, site prep construction, waste collection, permitting, legal fees, transportation and logistics, gas collection system installation, energy conversion units, generators. So a bunch of stuff that's depreciable over time. And we're just defining the start month of deployment, how long construction lasts, and then after construction period, revenue will start based on our revenue assumptions. Now, there is also options for financing of each of these construction or acquisition costs up to a certain percentage of the total cost, and then you could define terms on that, a stabilized interest rate, also option for interest only. And if it is interest only, you can choose to turn PIK on or off with your interest only rate. PIK just means if it's on, this interest is accruing and will just add to the final refied amount, whatever that is, after the interest only period. And if PIK is off, then your interest only period is you're gonna pay the interest while it's accruing, and then you'll still be able to refi it into a P&I loan after the interest only period. So, and I've seen a lot of client requests for more debt options like this, so I wanted to add it. It's nice for scaling, and you can use this for you don't have to use all 5 sites or slots. You can clear out data for the other 4 if you just want to show a scenario where you're just building out one facility and you want to see the unit economics of that specific facility, um, and the cost and what it can produce. So these are your main deployment assumptions. Revenue. So here we have our automated start month based on the start month over here and the construction period. And then for each site, we can define up to 6 different feedstocks. And feedstock is just, it could be manure, food waste, agricultural waste, whatever you're processing and turning into natural gas essentially. So you could name this whatever you want, up to 6 types. And each site can have up to 6 types. You might only use one at one site or two at a couple sites, whatever, what have you. This model lets you dynamically configure all of that. And then what we have, we'll just go through the top row. We define the gas yield, which is the cubic meters produced per ton processed of feedstock. So here in this case, let's say I process 10,000 tons in a month. And if my gas yield is 100, that means I do 10,000 processed times 100, so we're at 100,000, or sorry, what would that be? Let me see, a million, right? And then you also have this thing called process efficiency, which is saying, how this is the gas yield without assuming 100% efficiency, but sometimes as you're converting this to biomethane, you're going to lose some things and it's not going to be 100% pure. So we're saying the process efficiency here, converting the biogas to biomethane. If it's 80%, then you're going to only produce 800,000 cubic meters of sellable biomethane from 10,000 tons, assuming 100 cubic meters yield per ton. So that's what these 3 sections do to get you the actual biomethane you're producing. But this is the maximum tons that a site facility can do per month, the absolute maximum. Over here, you can define of that maximum, where do you start at? So you can start at 100% of that maximum, or maybe 20%, and then slowly you can enter percentages here for the increase in the capacity processed per month. So let's say this was at 50% and this was at 1% over here. So that means in month 1 of the site, the age of the site, you're producing 50%. In month 2, you're producing 51, and then 52, 53, 54, etc. until you hit the stabilized capacity. So this then caps off the max you can actually increase to of this maximum processing amount here. So that's all you're doing with these sections. It's not that complicated. Basically, you're just saying how much can I process in tons, what's my yield, process efficiency, and then how much of my maximum am I actually processing per month in tons of feedstock. Down here, we've got another revenue assumption, which is how much you're going to sell the biomethane. Now, typically, you've heard the word cubic meters a couple times in the video. That's because usually that's what this is measured in. So we're charging on a per cubic meter basis to figure out what our actual revenue is. This could vary depending on how you're selling it, who you're selling it to. Also, the cost can vary depending on how you're hooking in. If you're hooking into the gas grid or what have you. But this is going to apply to this net yield number of cubic meters of biomethane produced times this will give you your monthly revenue. And you can adjust this over time to account for price changing expectations of biomethane. We also have one more input here, cost to acquire 1 ton of feedstock. And you might actually get paid to take feedstock away. So if that's the case, you can just put a negative here that will affect the financials accordingly. So a negative expense essentially is a positive number. But you might have to pay to acquire your feedstock. So you can adjust this for the 6 different types of feedstock that you have here. And everything flows through. Matrix tab, this is how everything becomes dynamic. This is where a lot of the magic happens, figuring out what you're making. We've got some KPIs there we'll go over as well. All right, operating expenses. So we've got a couple sections here. The first big 3 sections are essentially corporate overheads, costs that don't necessarily change with scale very much. And here you can just define the start month of each cost and what the monthly cost is, and you can adjust what that monthly cost is over time. Then we've got other costs as a percentage of total revenue. And then now we get into the nitty gritty direct costs. So I've broken it down by site here. These are essentially costs directly related to running the facility that you have to pay per month. So it could be repairs and maintenance, spare parts, land lease if you're not buying the land, insurance, property taxes. So all of these costs, um, now they're kind of not so they're indirect costs, but I wanted to relate them to um, the site. So whenever the site begins, these costs start, and then you can adjust what this total is. So in this case, it's 10,400 each year. Now this was a tab I borrowed from the wind turbine, so that's why we have to update the text here. We'll just put regular monthly cost associated with each. This is actually going to be each site tranche. Okay, and then you've got cubic cost per cubic meter of biomethane transmitted. So this is more of a direct cost. So we're saying every cubic meter transmitted, we got to pay 5 cents or some amount. This could cover a bunch of different things, but it's one way to populate costs that vary based on the amount of feedstock you're processing and how much biomethane you're producing and transporting. You've also got 3 different parts to show cost per ton of feedstock. So this is cost to transport 1 ton by feedstock type. So if you transported 100 tons, it costs you $5 a ton. That's 500 bucks. So you're just going to look at in the monthly period on the financials how much feedstock was processed, how many tons of feedstock, and multiply by this. You've also got other costs per 1 ton of feedstock processed just to account for other things by feedstock type. And we've also got a cost to dispose of residual waste by type, and this is measured in per ton processed. Now that we know all of our different costs, we can also go to the Capex tab. Here you're going to see some data flowing from our deployment tab, which is we've separated land and site work or construction. You can just put the useful life of these, which is going to account for some depreciation. You can also enter 5 other Capex items in here that are not directly tied to anything, but the land and site work are tied directly to this section here. Site work would be this one, and then land is just this column. All right, and then like I said, you could also be acquiring the facilities and not building them out, which is fine. You could account for that here or within these rows, depending on which sites you're acquiring versus building, and just can adjust the depreciation or useful life accordingly. And then for these ones that are manual, you can adjust the month that this expenditure actually happens here. Staffing. Well, you might not need much staffing, but I've got a ton of slots here basically to define the start month of the staff type, how many you're going to have, and then the monthly starting cost as well as any payroll tax and benefits over here. And you can define how much the starting monthly cost changes over time. Here's our loans. So this is the PIC construction loans. So you can see how those are working here. If I switch, let's look at loan 5 real quick. So if I switch this to off on the PIC, you can see we'll be paying a 7% interest right away, and then we are, we're actually starting right with the principal and interest if the PIC is off. If the PIC is on, then you have interest only period. So I misspoke earlier. So what this means is if the PIC is off, there is no interest only period. It's just an initial loan with a starting balance and you pay P&I. If the PIC is on, then the interest is accruing and not being paid, as you can see here, and then it's just going on to the principal balance and then you start there. And this is compounding the interest owed as well. Okay, loans 6 and 7 are also loans you could do, but they're manual inputs for the draw month, um, the amount, terms, interest rate. So you could manually define two other operating loans, and these are just regular P&I loans that happen whenever the draw month starts. If you want to use them, you don't have to, you can zero this out. I would also like to note all of these assumptions for the feedstock yield and all that. I've just put in arbitrary data. You would go in and research um, yourself to figure out what numbers make sense for your plan and scenario. Okay, loans, cap table. This is just where you're going to define where you're getting money from. The model itself will solve for the minimum equity required based on the minimum cash position that you reach based on all the assumptions, which is financing, startup cost, construction, any net burn. It's just going to show you this is the amount of cash you need to keep the bank balance above zero, essentially. And then you could put of that, where is it coming from outside investors versus inside. And then this, if you just want to use the overflow, this will just equal whatever you don't put in any other rows. And then you can just define this. A lot of people just do this if it's not a joint venture and just put 100% into this overflow, which is just going to match the minimum needed. But if it is a joint venture, maybe you're going to raise some money, maybe you're going to put in some operator money and define the profit shares. You've also got internal rate of return for each individual row and in aggregate, as well as the cash flows accordingly. Other startup costs, terminal value. Here, just defining if you're going to sell, what percentage of the sales proceeds is going to go essentially allocate towards Capex items versus extraordinary income from just selling the operation, which is just a tax thing. If you're not including taxes, this is irrelevant. Okay, income statement. Now, there's a couple things on the income statement that are new. Well, there's one thing. You've got your revenues here, all the direct costs. And where are we putting it? So biomethane, feedstock transportation. I was curious where, this one, okay. Just want to make sure that was there. So you got your direct cost, gross profit, operating expenses, get down to EBITDA, which is earnings before interest, tax, depreciation, amortization, your interest expense, depreciation expense, and then taxable income, taxes, net income. Okay, and taxes are just taking the annual amount divided evenly over the year if there was a positive taxable income for the year. Down here we have cubic meters of biomethane produced, and then we have the average cost to produce 1 cubic meter of biomethane, which is an important number to know. And this actually is going to include all of your direct costs here, all of the operating costs. It's also going to include interest and depreciation because these things are necessary to produce the gas if you're borrowing money to build the site, and obviously the cost that you're using your down payment or equity contribution of those site costs depreciated over time. Those are all part of the final cost to produce. So we're taking all those costs against the cubic meters produced per month. And then you get that number, which you can see it's going down, and it's going down because our fixed costs are not going up as high as the variable costs, essentially, is what's happening. So your cost to produce eventually goes down to some stabilized rate. You see at the end, we've got exit here. If we were to turn this off, then these go to 0. And so that's the income statement, monthly, annual. Annual is the same as the monthly, just on an annual basis. You've got the balance sheet here. You see your cash. You see the model solves it never will go below 0. For cash position, you've got your non-current assets, cumulative depreciation, assets, liabilities, equity, retained earnings, and then assets equals liabilities plus owner's equity. There's our check there, which always balances out based on our logic we put in. Balance sheet annual. Cash flow statement, which is again like your uses and sources. You can see all for each period, what are all the things that are affecting the actual cash flow. So here you can see the initial capital expenditures for building out sites, how much debt you're borrowing, how much equity you're raising, and then operating cash flows, and then final net change. And this actually flows right to your balance sheet to get this number, which has to balance with all these other things. Cash flow statement annual. Executive summary with some visualizations here. You get your revenue up top, direct cost, gross profit, EBITDA, similar to the income statement, except for we're also showing all our other cash flow items here, like capital expenditure, startup costs, loan proceeds. You can see final periodic cash flow, cumulative cash flow, and the IRR of the project, equity required, project cash return, equity multiple to project ROI, and the same deal for the investor side and owner side, depending on if you're using those to populate. This is your discounted cash flow analysis. Again, project view, investor view, owner view. You can plug in a discount rate here and see the resulting net present value, as well as just the overall internal rate of return of the project. Looking at the total capital required against the cash flows thereafter. Visualizations, a lot of cool stuff here. So your basic revenue, gross profit, EBITDA, cash flow. But look at this, we've got revenue versus cost per cubic meter of biomethane produced. This is awesome. So you can see the revenue is kind of just going up based on those annual price increases, and otherwise the unit economics are fairly similar here. So your revenue is just slowly going up into the 40s. Your cost to produce starts up here around 40, but then it's dropping as you're producing more and your fixed costs are not rising as high. So this is essentially your margin that you're making of profit over time, the difference between these two. Because remember, this cost is taking into account all costs, every single cost item, interest, depreciation, which is a function of the Capex, all the direct costs, operating expenses, everything. And then this is obviously your top line revenue driver. Cash flow, total assets versus liabilities, gross profit percentage, EBITDA percentage, monthly cumulative cash flow, active sites over time, which obviously we only have up to 5 with this model. Total cubic meters of biomethane produced, total cubic meters of biomethane produced per year. This is per month. Cubic meters of biomethane produced by site per month, different lines for different sites. Same chart here as this one, except for we're now stacking, so you can see the total cubic meters of biomethane produced in a month, and within that month, what sites are making up the production. Average process efficiency, annual feedstock processed by site. So these are processed in tons. So total process would be the whole bar, and then the different sites, you can see how much they make up of the total. Here, annual feedstock processed by feedstock type, so a little bit different here. Instead of by site, we're doing by feedstock per year. So what feedstock's producing the most biomethane, or sorry, what's type of feedstock's being processed the most. Average cubic meters yield ton, average cubic meters yield ton real. So this is just your process efficiency ratio is the difference between these two. Total assets versus liabilities and average facility capacity utilized. So this is a function of revenue, this starting capacity here, this and this across all those sites, and we get our average with that chart. Okay, finally you've got monthly detail. The only input on here is just on other income. You might be able to sell renewable energy certificates, have government subsidies, or other ancillary services. Those are very, I didn't build logic for them except for you just enter your expected monthly revenue from those items here and it will flow through accordingly. That's added to total revenue, or to get to the total revenue here in row 44. Then we have all our costs detailed out, OPEX. Keep going down, you've got EBITDA here. This is just essentially a very detailed version of the executive summary. You get your loan details, startup costs, final cash flow. You've got a Capex detail here to see what you're spending money on and when, of the different types of Capex that exist. And then accrued interest here is to figure out the actual PIC loan balance and how that balances on the balance sheet. This is our reference for those numbers here. Alrighty, that's the financial model template. I hope it's very helpful to a lot of people. Renewable energy space is really proving to allow me to create a lot of new logic for these financial model templates, so I'm excited about that. And we'll see what comes next. If you want to purchase the template, link it's in the description box below. I think I'll probably charge for this only $45 one-time fee. Very affordable for what value you're getting here. Eventually, I'm going to have a template bundle that includes all the different renewable energy financial models that I've built. Right now, it's only going to be, well, I've got basically three. The wind farm, and then a general recycling model, which is not nearly as in-depth as the biomethane processing model I've just went through. Now, if you want to go over to see the site, we are here. I'll probably put this under, for now, just industry-specific models, and industrial is probably where that'll sit. So right up at the top, right with the wind farm model. And you can check out more. I do financial models for all kinds of different businesses over the past, coming up on 10 years soon. I've been doing these. Very happy, and I'll continue to do them. So check it out. If you want to see everything I've built, you can actually go to All Financial Models tab at the top and see I've done a lot of work in SaaS, subscription modeling, real estate modeling, and then the industry-specific models is what I just went over. I've also got joint venture cash flow, waterfalls, preferred equity, preferred return, a lot of different variations there, general valuation, accounting tools, HR management tools, Google Sheet frameworks for a bunch of different things with databases, sales pipeline, KPI dashboards, and then just all kinds of stuff. I've also built bundles. If you want to bundle a bunch of templates together and get a gigantic discount, you can do that here. You can do general discounts. I've got volume discounts based on how many templates you buy. You'll get a discount that goes up as the more you buy. Buying the bundles gives you the greatest discount. And then if you want to get everything on the whole site, you go to the home page, click on this complete library. You get everything I've built for $9.99. Very good deal. I'm continually adding to this. You get access to it forever, and everything I ever add to this, you never have to pay more. Now there is one other thing. So this gives you everything I've built, all the templates that I build publicly. If you want even more, there's Smart Helping Plus. It's a subscription program, $40 a month, one-time fee of $199, and you get all of the custom work I do that I don't go public with. So I'm about to add about 4 new models for April. I've done 2 already. There'll be 4 more added this week. And these are the initial ones that I've added because I just started this program this month. So basically you just get access to a folder that I update, and you can access the folder anytime. I keep it updated in real time, and it just has either spreadsheets that I've built from scratch for a client that obviously it's sanitized, doesn't have any client information, it's just the logic, or a template from Smart Helping that I modified that I never went public with on the site. And that's pretty much everything I have to offer. Check it out. You can hire me. I do custom work as well for $195 an hour. Other than that, enjoy the financial modeling, and I'll see you on the next one. Like and subscribe.